Options trading strategies. My name is David Jaffe from beststockstrategy.com, and you can go there, enter in your email, and receive around $400 worth of free information. I also have the stock trading or real-time trade alerts available. I want to tell you the exact strategy that I use. All right, 2017 I made 72%. This year in 2018 I'm going to make less. Now I know that a lot of people are greedy. They're not satisfied with earning 50% a year, and that's totally cool, because if you try to make more money, the reality is that you're probably going to end up losing all your money. So if you're not satisfied with earning 50% a year, then do whatever you think is better and that serves you, and then learn from that experience. That's exactly what happened to me. And I graduated from Ivy League University, and I worked as an investment banker for 5 years, and I've been surrounded by some of the greatest trading minds in the world, and I still gave into my inherent human greed to make more money as quickly as possible. And I can tell you that that really sucks when you lose money. So if you are not satisfied earning 50% a year, then you can still watch this video and you can disregard and think everything I'm telling you is bullshit, and you can try other strategies. And I hope that you're gonna make money, but I know that you're not, because I have a tremendous amount of experience, and I'm OCD and fanatical about making money and optimizing my trading. So once you try other strategies and you end up losing your money, then you're welcome to come back, and I'm still gonna be here, and I'd be happy to teach you and happy to help you. So the most important thing that you need to do is limit your information sources. We live in a society where there's way too much information and there's not enough action. You want to turn yourself into a creator and not a consumer. The second thing that you want to do is you want to evaluate your account size. If you have an account size that's below $15,000, you want to have a watch list with 5 securities on it, and you want to have positions on with at one time with no more than 1 position, a maximum of 2. So you have a watch list of like 5 or 6 securities, and at any one time, if your account size is below 15,000, you're gonna have a maximum of 2 trades on, preferably 1. And at one time, I only have trades on at 5 securities, right? These 5 securities are Facebook, Amazon, Boeing, Lockheed Martin. So not even 5, 4. But I usually also have positions on maybe like half of these, like RTN, which is Raytheon, Goldman Sachs, a gaming stock like ATVI or TTWO, and PayPal. So maybe I have 6 positions on at any one time: Facebook, Amazon, Boeing, Lockheed, and then 2 of these 5, right? So I choose those, I put them on my watch list, and this is what I've been doing for like the past 5 or 6 years, and then I just get comfortable with the trading range. So for Facebook, it's trading right now at $175. I know that its trading range is around $170 to around $182. I simply wait for Facebook to fall to the low end of that trading range, around $172, and then I sell an out of the money naked put option with a strike price of around $158. I know that a lot of people are thinking right now that selling naked options are incredibly risky, but the people that you heard that from are not successful and profitable traders. Selling naked options is way safer than selling vertical credit spreads, because it maximizes the credit that you receive. It's incredibly easy to manage and roll a naked position as opposed to a vertical credit spread. And also, when you sell a naked option, it inherently reduces your buying power by substantially more than a vertical credit spread. As a result, it protects you against your human desire to engage in greedy activities. I can't tell you how many times someone who would sell 2 naked options ends up selling 20 vertical credit spreads, and then they get caught because the underlying stock that they sold that option on trades below the naked option that it sells below the option that they sold and above the option that they bought to turn it into a vertical credit spread. So they end up getting assigned those 20 contracts, which is too large for their account, and their broker ends up forcing and closing them to close out that trade at a massive loss. Vertical credit spreads are dangerous because inherently it reduces the amount of credit that you receive since you're buying that throwaway option. It's very hard for you to roll and manage that position since you constantly have that drag of having to buy an overpriced option. And perhaps the most important thing is that it tells people and gives them a false sense of security that they can trade way more contracts than they should be able to trade. All right, so you sell, the way to be profitable, you sell naked options. Then what you do is you sell a naked option with an expiration of around 6 weeks out. You can wait like 2 or 3 weeks to see how that option is doing. Let's say you sold an option on Facebook when it was trading at $175, then let's say Facebook goes up to $185 2 weeks from now. There's no point for you to wait an incremental 4 weeks when that option that you sold when Facebook was trading at 175 is now trading for like 10 cents. When Facebook was trading at 175 and you sold that 158 put option, you probably collected around $1 per share in premium. Now, 2 weeks later, if Facebook is traded up to 185, maybe that option is trading at 15 cents. So you have been able to receive 85% of the premium in like 1/3 of the time that you've waited. As a result, it is not capital efficient, and it's not an efficient usage of your capital for you to wait the incremental 4 weeks to simply collect 15 cents a share. Close out that position and then scan your watch list for Goldman Sachs or Boeing or Amazon or Lockheed Martin or one of the gaming stocks or PayPal. See if there's an opportunity for you to sell puts in one of those positions. If one of those positions are trading at the low end of its trading range, and then you sell an out of the money put, and then you just simply wash, rinse, and repeat and continue to hit singles. That's what we do. It's simple. I don't read any articles. I don't look for affirmation bias or any of that crap. I trade for 15 minutes a day. You can go to beststockstrategy.com, enter in your email, and receive $400 of free training. If you want to sign up and be a member of my Trade Alerts product, you can do that. Please like, comment, subscribe, click the little bell, and share this video. If you have any questions, leave a comment below. I'm doing this because I want to be of service to other people. Doing that actually helps me feel good. So I'm doing this for selfish reasons. And if you have any questions, let me know. Thank you for your attention.